Hello and welcome to the latest London South East CEO interview. I'm Donald Leggett and today I'm joined by Maurice Healy, who, as you probably know, is the CEO of AIM-listed Glantus Holdings, and they are the Dublin-based global supplier of automated accounts payable systems. Greetings, Maurice. So how are things with you?
Very good, Donald. Good to see you again.
Oh, it's a pleasure to have you on again. So what's new? What's happening in the business?
I suppose there are always a lot of things going on in our business, as you know. Yeah, exactly. At the end, we IPO'd in May, and we've done 2 acquisitions since. So, you know, the priority right now is bedding those ones in, and thankfully the integration of those.
And how's the integration coming along, Maurice?
It's going really well. I mean, we had one in Boston, the TIC one, and one in London, the Meridien one. So the teams have been working together really well. So touch wood, it's going exactly as we hoped.
Well done, because the integration is the hard part, isn't it?
Oh, look, there are so many elements to an integration. In our case, the technology is involved. You've obviously got all the people issues, and then you've got the go-to-market stuff. So getting the branding together. But what is great is that we now have one brand, even at this stage, across the piece. So the TIC brand and the Meridien brand, they're gone, and everybody's pushing forward now with the Glantus brand. So
I was wondering why you were rebranding. So that's part of the integration process.
Part of the integration, there were two reasons. I guess, to be honest, Donald, the integration of the brand, it was quicker because of the rebranding rather than the other way around. The rebranding was really done because we've now got clear product. It's still all on the same platform. That all works the same. But for customers and even investors, it's much easier now for everybody to understand exactly what we do because the products define that.
Okay, and is that the DataShark product suite that you have?
Yeah, so we put it under the DataShark suite because DataShark, it's a good name. You know, we're making good use of it, and then under that DataShark brand, we've got the individual products like Delve, which does the duplicate payments, so we're finding those, and we've got Discover, which is doing the full analysis of the ecosystem, the supplier ecosystem for our customers, as well as, you know, statement consolidations, all of that kind of stuff. So it's very defined, it's clear, it's easy for people to understand. So we're really pleased with it.
Fantastic. And how about the business side of things? Are the revenues, the margins, are they all looking nice? Are they all growing comfortably? All the usual things that I might be asking you.
Yeah. No, they are. I mean, the business is going well. We've tweaked a few things, I'll be honest, Donald, in that, you know, we're going more for the subscriptions, which can, in the short term, bring a lower revenue but a higher margin. But in the longer term, it drives higher valuations. So we're doing a bit of tweaking like that, and we've included everything in the note that Arden put out recently. What's great again is, you know, whenever you're doing these presentations, everybody puts up the customer slide, and you know, it gets a bit boring. But we really do have, you know, high-end global brands now as customers. But what's great is that since the rebranding, and we've gone to a lot of AP-specific events. By the way, Donald, if you're not in AP, you don't ever want to go to an AP-specific event. But
but that's your expertise, Maurice. You mustn't say that.
but these events have driven a lot, and we're getting much more inbound inquiries from these large organizations now as they see where we're positioned and how much more we can do for them.
So the larger side of the customer is beginning to wake up to the fact that you're a player on the block and that you're able to deliver good things.
Absolutely, and you know, having the PLC brand is good for that as well. You know, the fact that we're on the London Stock Exchange means something, particularly in the stage when you're dealing with these large global companies. Just having PLC at the end is a help when you're talking to these companies.
They see you as a trusted partner.
Exactly, and along with that, you know, our ISO accreditations. You know, people don't always put a lot of store in these things, but they are vital for us. And we've got 27701, which is the most recent around data privacy. Not many companies in the world have achieved that. And we've got all of that, which, nowadays you get when you're signing up a customer, you get a 34-page document to fill in around security of data and all of those things. And we just have that now on tap because of the accreditations. And only in the last couple of weeks, we got those same accreditations in our Boston office. So it's great.
It really is. You're cooking on gas, Maurice. You mentioned the United States there briefly. So what's the upside potential for Glantus in the States? And how do you keep this momentum going as you break into the States? Because others have found it hard.
Yeah, and look, it's of course it's not the easiest market in the world, but as I've said to you before, Donald, I'm not a greenfield person. I don't believe in going in, pumping a whole load of overheads, opening an office, and then starting banging on doors. And the acquisitions we've done in the US, I think, justifies that decision because we're actually immediately there. We're there with customers. We have referenceability in the States. We have these big companies using our products. So when we go to events in the States, you just put up the list of customers in the US that are using the products and you just get momentum that way. So the strategy of acquiring in the States rather than doing a greenfield is paying off leaps and bounds at the moment. And as I was saying earlier on, the pipeline coming in, even the inbound, is really getting stronger from month to month.
Fantastic. And you've been, I know that you do this mixture of both growing the business organically and through your buy and build strategy. And on top of that, and it seems to me this you need a bit of management power there. So you've added David Rosenthal and Diane Gray-Smith. Some management expertise in there. Now, what are they going to do for you?
So let me start with David because they're both coming in for two very different reasons.
Right.
So David is coming in as COO, and since the IPO, from a run rate perspective with the acquisitions and the organic growth, we've more or less doubled the run rate of the business. And I was kind of doing the CEO and the COO job, so this needed somebody 100%. On running the day-to-day business.
David takes the pressure off you a wee bit.
Yeah, I didn't want to put it like that, Donald. I mean, it's for everyone in the company, but yeah, it helps me an awful lot, I have to say. So,
no, you are the most important person in the business.
You're too kind,
to put it like that, but you are.
Well, thank you. But the thing is that it really for everybody, there's somebody there today, and he has so much experience. He's worked with global companies. He's worked in financial services, where he's been involved in the rollout at a CEO level of products like ours. So he knows how we should be doing it. He's got great experience managing people. He's a tremendous asset. And as you say, he does take pressure off me, which lets me free to work on the acquisitions, and let me free to work on the share price and dealing with all of those things, the PR side of things. So
leaves you free to do the creative stuff, Maurice.
Oh, the strategic stuff is so important, and knowing that we have somebody as solid as David driving that business day to day is huge. And he's only in a few months and he's already making a huge difference. So really pleased with that one. Diane, on the other hand, is a different play altogether. So Diane came on as non-exec, and at the time I invited her on to be non-exec because of her experience. Diane has been CFO of large global fintech companies. It's her experience, it's her background. She knows how to play the fintech game. That's what she's been doing for the last 20, 30 years. And she came on as a non-exec, so she's been 6 months kind of looking at our business and working through our technologies and what we're doing. And what we have, and when you look at the data, and again, I would have mentioned this before about how do we exploit the data we have. So at the moment, across the range of products, we analyze about $1.6 trillion of spend. We have 300 customers, 120 tier one, but we have 4.8 million companies operating across the products because we're dealing with our suppliers, our customer suppliers. So that's about 4.8 million people, and there's about 120 individual payments that we can see going on. So that's a lot of big numbers and a lot of big data, and I love throwing them out, and it took me ages to memorize them. But the fact is that there's a value in that. And Diane has come in, and we're looking at how we do that in fintech. We're looking at how we do it in supply chain finance, payments, FX, all of those things. So that's a really exciting development. It's a real endorsement of the business and the data what we're doing, that she made a jump from a very working with a large fintech company to come in here to drive that side of the business for us. So it's a really exciting development.
She looks after data and detail.
Everybody does that better than me, Donald, I can tell you that.
Fantastic. The recent research note from Arden, you referenced it there earlier on. It described partnership sales as very healthy. And this is where other people selling your products on your behalf, like VAT IT, I seem to remember in a previous interview we did. So what will partnerships deliver in 2022, and how do you increase that going forward?
Yeah, it's a very interesting side of things, and I'll give you good and bad on a few of these things, because you don't run a business and grow as quickly as we do without a couple of issues. So when we went into the partnerships, we didn't get it 100% right to begin with. We were signing up partnerships, and if you're not, an integral part of their growth strategy, converting their salespeople to your products can be a problem.
Oh, yeah. Partnerships can be very tricky, because at the end of the day, they're selling in your product, but they don't know your product as well as you do.
Correct. And salespeople are salespeople. They'll go for the low-hanging fruit.
Right.
What they're used to selling is what they continue to sell. So we've been tweaking that over the last few months, and Andrew Fraser, who heads up partnerships, has done a great job now. He's got a very specific target list, and it's so we're now seeing a bit of momentum from the revenue side coming on that. So I think it'll deliver a lot. But more importantly as well, and this is another kind of not the most positive, the share price hasn't got the growth we wanted, despite the fact we've done everything we said we'd do. As the Arden note said, we're going to meet our earnings targets, all of that. It's all very positive. But, we live in a world where share prices are a bit dampened down at the moment.
Is it the Ukraine effect as much as anything? Because as a business, you guys are really, really performing.
We're looking at that, Donald. As to what exactly it is. It could be the way we're communicating our message as well. I don't want to put it all on external issues. Certainly, a war doesn't help. I feel crass talking about that. We have development teams in Poland ourselves and Lithuania. They're on the border with Ukraine and Belarus. So our biggest concern in that area is making sure we're supporting our teams in that area, in those geographies. But also, the rebranding, me having a bit more time to explain the strategy a bit better. Hopefully we'll have banking partners coming in for the fintech thing. We've taken a view as a board, and I'm lucky we have a really good, strong board. And we're saying, look, calm down. We've got geographic growth in our partnerships. We've just signed up a Canadian partner, so we're in Canada, South African partners. So we'll have that. It's difficult to do acquisitions, the big ones. We'll have a few small ones, but if most want us to use paper, people want to stay in for the game going forward. But because of the dampened share price, I don't want to use paper. We're still at our shareholders. We're acting on behalf of the shareholders, and it reduces the value if we're doing it at the current value. So we've taken a view as a board. We have a lot of good news flow coming down the road. We're trading well. Things are going well. The rebranding has worked. We have this whole fintech, which isn't priced anywhere on anything. It's almost like a free option. So we believe we just keep doing what we're doing. The share price and the markets, and that, Donald, eventually things catch up. They'll take care of themselves.
It's a funny market, though. Things are either overpriced or underpriced.
Yeah. Well, we certainly feel we're underpriced at the moment. But look, again, as I said, I have a board that calms me down on these things.
How many, in terms of how many shares do you as a group hold? How many institutional shareholders do you have? And how much is free float out there for the PIs?
So if you look, that's another reason that, you got these conversations with people about the share price. They said, oh, there's not enough free float to move it forward. And they talk about issuing more of that type of stuff, but then you're issuing it to holders. So I don't know how to help the free float. So to answer your question more specifically, it's The management own 58% of the company. Management with friends who will just do, I don't mean that to be rude to them, but joined at the hip.
Long-term investors who you all vote as a block.
Yeah, 65%. And then we've got VCT holders who own around 50%. So that's 80% locked in. That isn't going anywhere. And then of the remaining 20%, you know, I've just done a roadshow. Of course, we picked the week when the war started. So we didn't meet many new investors on the roadshow, but we met all our existing investors. They're all happy with us. We don't have sellers. We performed and they recognize that and they see the opportunity going forward. But as you know, nobody's spending right now. So they're all happy. So even with the ones that we have, it's all small amounts that are moving our share price. 10,000 shares could knock 3p off our share price.
That's how come you're valued at the level you are? Because you're valued by the amount of transactions that take place on a daily basis, and there aren't many transactions taking place. People want to hold you.
And there's nothing we can do about that at the moment except keep doing what we're doing. As I said, I just believe myself. It's all going to catch up. We're not getting brief from shareholders. The team is consolidated well. The leadership team is now stronger than before as well, and it's all going as we intended. And the markets will take care of themselves. I'll do a bit more of this stuff. We'll try the new branding. We'll explain it better to the markets what we're doing. Fintech, I think, will ultimately give us a massive pickup as well. So there's a lot of positives coming down the road, and I just have to be patient. They tell me.
Honestly, you're a great man and you're doing all the right things. That's all I can say from my perspective. I think you're doing really well. So my final question, news flow. What can we expect from Glantus in the coming months? What have you got up your sleeve? Whether you can tell me about it or not, do your best.
No, I mean, I can tell you our aspirations around all of that. I mean, where we are looking at the moment, we have to replace Diane with a non-exec. So we're looking at bringing in somebody substantial from the States as a non-exec to replace Diane on the board. Diane is staying on the PLC board, but we're bringing in another non-exec, and that will be American-based, which will help our move there. We have a few more partnerships. There are a couple of smaller acquisitions. I'll see how those things play out, but we expect to be performing quite well as a business as well. So there are a few geographic things on the partnership side to come, and as I said, we expect to perform pretty well as well.
Maurice Healy, CEO of Glantus Holdings, thank you for joining us today. It's a pleasure as always and very illuminating. Thank you so much. To hear what fellow investors think of the stock, that's 20% perhaps, go to the Glantus Holdings chat pages on London South East. We'd love to see you there. Or you can Google London South East YouTube and subscribe, and then you'll receive alerts to interviews just like this one. As ever, thanks for watching and do stay safe.